How you doing?
I'm okay. Busy. So busy.
Okay, so it says just so you know, my start video is crossed off.
Yep, you're good. I see the red dot next to your name, so you are recording. So
Okay,
you're
well, but for I can't see anything on you, just so you know. Oh yeah, I do.
wait, the screen share died? No, it says screen one's showing.
No, I see. Okay, so you're on the spy.
Yep, right here in the spy.
Okay. So what's been going on trading wise is that so I've been paper trading with the options,
Sure.
and
Yep.
it's been going shitty until yesterday where I I've been figuring it out and just throwing $50 here and there with a $200 Robinhood account. And yesterday, um, it did go my way, so that was awesome.
Good. I'm glad. No, let's break it down. I know you messaged me some stuff, and I seen a couple of the charts there that you wanted to break down for your trend lines quick on Apple, and then you did have the two call strikes at 195 expirations on the 29th, and then you got it at 191 last resistance. So we'll have to see what your fills are there. We can take a peek at it. Yeah, so you had 29th March, right?
Yeah. 20. No, they expired today.
Expiration
Expired today.
329. Oh, I'm trying to read your Discord message said you had two calls striked at 195, expiration 329. So I'm assuming that might have been 19 instead, or was it 29?
It was 22. I mean,
29, 329, right? Right here. That's where we're at.
29, but I think they expired today, which is the 22nd. So
Okay, so you must have had expiration 322 instead.
that's what I should have had.
Okay. Yeah, your Discord message says 329, so I was just trying to go off that one, but no big deal. Gucci, we're good, good. All right. So what'd you play? I'm excited to see. We're obviously on live time here. We'd have to go on demand and kind of crank time backwards, but I'm curious to.
I don't think I'm even crank time backwards yet. It takes a few days to do that.
Oh, that's right, 3-day minimum. I forgot about that.
If you I fucking erased my chart too just a minute ago. So because I was going to play Apple today again or look at it, and then Robinhood had said that I had two contracts pending, and I didn't, and I was like freaking out because they were at $800.
Jesus. Yeah, Robinhood is ugh, such
So
a
I
pain.
wanted to make sure I didn't have something, even though it was making money, that I didn't know that I had,
Of course.
And I went online and they weren't there. I sent them an email and I took pictures on my phone of what they said I had. And it looks like it was just a mistake on what they do. So, and I really hadn't been using Robinhood except last week. Said I'm going to go for,
Sure, definitely.
kind of clunky for sure, but
I mean, it can be, but I mean, it works, but sometimes free costs you money, unfortunately.
right.
Holy cow! What did I just click here? There we go. Okay, so
I think that first chart I sent you was a mistake too, because I'm basically. What did I send you? I thought I sent you charts.
Yeah, you sent me two Apple charts for trend lines.
Yeah. So that first Apple chart that I sent you, and I put arrows on my entries.
Yeah, I'm looking at the first one here.
Yeah, so basically I got, what was I going to ask you?
What day was this? 320? Yeah. So we're looking.
It didn't go my direction at all. And then I just wondered what you would have done. So I got in and then held overnight, and I had the 190 strike, I think, and it went down to 185, and I got out
on that big dip. Yeah, that's
that big dip, and then it went up. It went up where I thought it was going to go, and I was like, "Fuck, man!" And is that just typical?
You see, once in a while, like you weren't wrong for getting out, because if you would have had a stop, say you got in on the dip, or up here, your stop would have been a real snap of here, right? Of current day lows, that 185.18, and when it did break that and travel up, a huge amount, like it's not bad that you stop up, because getting stopped up by this big nasty candle is not uncommon at all. If I would have got in long here and it would have dubbed, I couldn't say, depending on the mindset, what the volume looked like, but it's not one of those things where, I would have had to see it trade live. But just because you got stopped out here doesn't mean you're doing bad. And I probably would have got stopped out too, because under VWAP, you ever broke under VWAP, came down and started doing these big pulls down. It could have been a panic candle where you could have lost your whole position, especially in options. But that stupid buyback got, and I think that might have been that SPY. It might have been a ripple effect from the news here.
All the news looked good, basically, but what was happening was that some federal thing was going on too. They were making decisions.
Okay, yeah, and that could have been very, very prominent in that. I guess so I have this overlay trend here on Apple. It came from the prior day, the 19th, just on highs, sliced through lower highs, and I extended to the right. And remember, when you take your high, slice through lower high, that's your long reversal line, right? So as it's trailing down, hitting its head on this trend the whole time, even here in pre-market, and then again here in the morning, it squeezed back up. And we don't chase the long, we wait for the retrace, happen to be VWAP and trend, and that would have been the premium long entry right here.
I got to figure out, because I haven't been using those lines. I just got kind of like hung up on the ones from the bottom that go up.
The short bias lines?
Yeah.
Because that kind of tells you where your, higher percentage, how your short lines are.
That's my short bias line on that chart.
That would have been your Apple short bias line, because you take the ultimate lows and you slice them through a true higher low, and each one of these would have worked. I mean, you want to get, like I said, an extension about an hour out, so that's the true low all the way to about 8:30 here my time. That's about the cutoff I would use for it. It's only that first hour that algos pay attention real close to these, and then
the first hour.
Yeah, I try to get the real low and the higher low out of the first hour. Sometimes I'll go to 9 o'clock, 9:30, but you're really just trying to get that 8:30 to 9:30, and for some odd reason my chart's showing 6:30.
That's for me. It's 6:30 to 7:30.
Yeah, definitely for you it is. Yeah. I don't know why my time up there says, okay, whatever, it doesn't matter. But it's completely not correctly correlated here. It says a 6:30 open right here, and the time is right up here at 9.
Time, man.
Oh, that is really weird. Okay, I'll look into that. I guess I don't look at the time as much anymore. I just look at the 0.30. But yeah, within the first hour. So if it opens at 8:30 and 9:30 back here, so in this case, it says 6 right here, and then 7:30. Your first hour would be like right here, 2 hours out. We're looking at a little bit longer time frame. I try to get them in the first hour. Sometimes I will stretch them out to try to stay within the first if you can. But the way Apple moved right here, if you would have stayed in the first and you would have got, a real sharp line, probably would have worked, but it worked late. As you can see, there's not a real good entry there, and you probably would have got stopped out if you didn't wait for the rollover, which is a pain in the ass. That's why you try to stretch that higher low out a little bit way back here. So when you get that higher low test out there, that's when the real short signal is, and then you're going to look for prior resistance to match up with that.
Yeah.
And that's when you're playing the outside channel, like that it's an upside down wedge. So
the outside channel. Okay, the outside channel.
That's like when you're in this wedge right here, you're on the inside of this wedge, and then when it's snapped out of it, you look for the retrace back up to resistance, and then this wedge right here, since we're on the outside, we just look for the rejection point prior resistance. So when I say outside of the channel, don't get stuck on the term. More or less, look for the resistance.
Yeah.
And if you can get a low trend line matched up with a higher low sliced through for a nice rejection point, take it all day. And that's only, these are scalp lines. First hour, these are equity share lines. And if you're doing options and whatnot, again, you don't want to use too many intraday lines unless you're looking for, and of course, in this market, lots of longs. I mean, shorts have been getting burned very, very, very much very recently here. So charting out Apple like today for the overlay, I use a lot of prior day lines, and you know that. So we teach that, or I teach that a lot, as using the prior day lines. So like charting of our Apple right here, we see it failing after the retrace. We waited for the grind up and the retrace. You would try to take your trend here. Yeah, previous day high, pre-market high 197. And then you would slice through your lows. Now, for this guy, we have our low and higher low, and we can make a channel there. So Apple could easily dip all the way back down there and start a bouncing ball short. So if I was on the put side of things, I would see this higher low take place and this consolidation. I would roll the volume up. I would look at the volume in this consolidation, and right here, right where the buyer candle kind of beat out and got sold candle right here, that's when the second this volume comes up and starts taking to the sell side, I would definitely go to the short side, that consolidation range of volume here. So we're taking a peek at it. We see all these two seller beats are what I'd be paying attention to. You see the two seller beats here, just a chop candle, but that it signifies, okay, well, the volume might be stagnant for a little bit. If the buyers don't beat out these two sell candles right here, which they didn't, the next two were lower. That means sellers were in control from 934 all the way to the short position up here.
Okay, now thinking more swinger option-ish, okay, which is because you just spoke about day trade, right?
Correct.
Okay, so to look at this as an option trade that goes, because I just and I did it too soon, it looks like, because I took one call a few minutes ago at 196 for Apple to go to 200. And my expiration date was April 2nd, I think. So that's what, so I did that. And I'm looking at the candles. I should have waited. So I see what you're saying.
What was your entry on your call? That was today, you said, right? So let's break that down real quick. At 196, you took it long?
At $196, because I've been putting my Robinhood trades onto my TOS. So I did a 200 strike for April 5th, and it was at $2.43. Anyway, that's what I got going on. See what goes on for, looking long range, which is what I need to start doing. And
what was your entry? 246?
240 right now. 241. And
yeah,
the ask, right?
Well, I'm looking at it. I'm wondering what your fill was. So here's the 200 contract for April 5th, 19th on the screen, and the spread right now, 0.33, 0.38. What was your fill at $2? Is $2 and what cents? 46, did you say? Because we're down about $10 then at per contract.
Well, mine says I'm down 40.
What was it? Okay, so your entry was higher than that. What was your entry on it?
My entry was,
if you go to your history, it should tell you your where the contract was purchased at. $2 and what cents?
236. No, that's the mark.
No.
Well, I did it on Robinhood.
Mm-hmm.
And
so you would go to that little person on the bottom right-hand corner, and then you'd hit history. And when you hit history, you should see your Apple call April 5th, and it'll say the dollar amount you were filled at on the right side.
$2.89.
$2.89. Okay, that makes more sense. So
Yeah.
you're at $2.89, thus being down right now, because $2.80 was it? We're down to the 230s. That's over 50, about $50.
Yeah,
So
45.
that makes sense.
So we'll see, how that goes. And I understand that stuff.
Yeah. For the longer term, we're going to go to different charting. You got to go to a longer time frame. You want to start swinging. It's going to be off the 4 hour. And
Yeah, I got my charts going at the 4 hour and the 1 hour.
Okay. Yep.
The daily.
Mm-hmm.
That's what I've been looking at. If I look at the daily, I mean my resistance lines are at 194.99. Then looks like 198.21, and the next one would be the 202. From that last big hump that it did from 7/20/18 to 10/16/18, because that, and if I take them further left, there's nothing there. So I think it's gonna go up. It looks like it, and plus your tech stocks and
Yeah. If the market would have recovered the weekly trend and headed up, that's where Apple would have been a 200 price target. But you see the big rejection on the 4 hour here, and SPY lost the weekly trend. That's why we were short biased in the morning here. So if we go to SPY, this is the weekly trend that it failed, because it was holding above it pre, and we were sitting up here, and then it lost the daily and weekly trend, which means it was going to magnet right to 281.80s, which was the call, which is right here. So this support is where I said it would probably bounce at. So we got the bounce play, had the retrace, and that was the reshort. Now, because the market is so far, up and over, this is just the next really big weekly trend test. This big daily test line comes from, right here, all-time highs, sliced through a lower high. So this is a major resistance. Just because it broke up and over a little bit, then she opened real low and a gap down, it had to hold. Now, the only lifeblood we have left in SPY here is the 9 EMA and the coming up here on the daily chart. And if that doesn't hold, along with the support here, we have previous body from the 18th, and then we have wick on the 19th, 20th body, and then nothing from yesterday's support. But we have a pretty good standing support from this top we had beat out as well near 281. This has to hold, like this level right here, this 281 60s all the way down to the 90, maybe 281.50s. If we don't hold here, it's gonna magnet down to this weekly's trend. It's gonna come all the way down to the 278. So if it would have stayed up and I can't be bullish on tech when it didn't break and hold over. We were looking for the hold over these two trends right here this morning when it was starting to push up. We broke over the weekly, came down, found support, came back, and then it just double top. We'd failed, and then it retraced all the way down to
right now.
Yeah, completely bearish day now. Yep, completely flopped because
I should get out of for my April 5th expiration date for 200 on Apple. I should get out right now.
I wouldn't be long biased on it. Nope, I can't be long biased on it. But again, entering these trades, your plan has to be where's the price action got to go for me to get out of my trade, right? Like as a swing trader, I wouldn't take it off until 194. I would just suck up the losses, because if Apple bounces at lows down here at 194 and then continues back up again, you have a time frame where Apple can continue. But taking a long way up here after a huge extension off the 9, we can't swing long up there that high. The long play was way back, where did I call it? 179, I think, 178. At the break of this resistance and hold, this was the long play right here. This is where I said get long on Apple. Swing target was 185, made it all the way up to like 188 before the pullback. So that was more or less the swing target just off a prior support and resistance. That swing call was. So I mean, now you got to look at it for, we're up, 7, 8, 9 days up without a big pullback. We've had a couple higher low dip buys, but then it dip bought here on the 4 hour. You see, recovered the 9, and what it did was curled here. And this yesterday, it beat out highs, was squeezed out all the shorts that piled in at 189, right? And then it just continued up, and up yesterday. And then it had another big push up this morning with a little bit of the market bounce, and now it's down. Now, if I had a call option, I would have to have a plan. If I'm buying, I need to know exactly what my risk is and what I can afford to lose on it. So I try not to tell people at all where to get out or where to buy or where to sell, because it's just a practice I try to teach, not to take a trade unless you have the plan. Like if you purchased it, where was your stop out? Where was the plan to stop out? You try not to wait for it to hope. Right now, you got a tail, you got a cat body, and this is starting to set up they call them like a scared cat. That's a weird pattern that actually plays out a lot when the chart is scrunched up. So like a tail, a body, now it's going to come up for a head. And if it completes and holds above this, it still could go up. So if I would have took a long anywhere on the grind up here in the recovery, my stop out would probably be 194 at lows. And it would be a snap of lows. Not only do we have previous day support here and a good chunk of it, I know where the market support is, which is now nearing this line. The market has to hold. It's gonna hold here. It's got to hold that 281, right? So this is where that major support is.
Start to and that was on my list to talk to you about, is that I need to really work out the SPY hand in hand with my trades. Yeah,
definitely. And as far as weekly trends, a lot of these weekly trends are pretty easy to chart out, right? So let's see here. If we're looking at, wow, what a terrible SPY dump. This market is not easy by any means. It's a very hard market to learn on. These big squeezes and such. We're getting all the way down to 50 EMA now. Our level was just broke. It's either going to pick up here. It's gonna lights out to the weekly trend, but it should pick up here. Now I remember on the daily trend here, we got these major supports here. It's coming in as support now. So as long as SPY gets its crap together here, holds this huge 281. Like we said, the body here, it kind of already failed the 281.60s that we were talking about before a little bit, but we're just tapping the 90 EMA. It's got to hold the 90 EMA on the daily. It's got to hold up here. And if it holds up here and gets sucked back up and consolidates, well, we're going to be stuck in a range, right? When something already puts in such a heavy move, like the dip by here, this was where my support was. It ended up hitting it to the penny. It was fantastic. Squeezed up, and then the strong recovery of the weekly trend with volume right here. That was the swing for the SPY. That's where my calls would have been bought. And then
so that line that you hit to the penny, that's off the 4 hour or the 1 day, or where did that come from? Where did that support line come from?
Line right here, this one, that's a 4 hour trend I have. I drew this one from the 4 hour.
Where did it start? Just out of
this one right here. I drew it back to here, and it lined up directly with this green split.
Show me with your cursor.
Yep, right here. You can't see. Can you see my cursor?
Yeah. This
split lined up really nice with this support to the penny. That was a big buy up. And as I continue to the right,
the green candles. Okay, I see.
Yep. So I had a split right here. I had a wick support buy right here. I had another red candle wick support here. It ended up failing that one, but there were some huge interaction points there. The farther I go back, the more interaction points I see on this level. So when I charted this one out, and I also had it right here. Now this is an engulfing like split body where the candle body right here, a lot of the times at pre-market and then a big push run, that's a squeeze level, you call it. So when you get a little chunky candle like this with a wick on top and it kind of looks like a cupcake with a candle in it, and the body pushes real heavy off this level right here, that body level, that's a squeeze potential level, which means there was a lot of shorts piled in near that level that had to cover.
Yeah.
So So when I seen the spike coming down, I put my bounce point there 1, because we had this little cupcake. That those guys are literally bread and butter. You got to watch for those. These big squeeze candles, you can see where shorts piled in here, drug it down, came all the way back up, and then this panic candle solidifies this little cake candle to be the level I would watch for. So you see the body line up right here on this 4 hour candle. You see 2 wicks and a body interaction as an over under on the red one right here. See right here?
It's hard to follow your mouse because it's just so it's all over the place. Just so you know.
So,
There's some kind of lag going on. That's a bitch to follow.
okay, I'll slow down just a tad bit.
But I'm getting it. Yeah.
But yeah, that support play was literally from that squeeze candle, because it just looked like such a good, the body interactions right here were just so strong, where it had a squeeze point over this body, and we'll just do this and squeeze this out. So this level right here, that blue line from
Yes.
272.5, you see this candle here, the one to the left of it. We have that body split. We had a buy up here. We had two nice support holds here, of bodies again, and then our little cupcake guy right here that caused a huge squeeze. I just knew this level was going to be a very prominent one. I didn't mean to hit it to the penny. I mean, this was the area I was watching for. It just happened to hit to the penny.
Yeah.
It's just really cool when that happens. But that level, that's the reason I kind of picked that level. There's, next question would maybe be, why did you pick, well, that level just randomly right there? Well, I found some of the best interactions with that level, because as you're coming down and, you lost the support here, and it almost, when a big squeeze happens up here and you kind of support and you find that higher low right here. I mean, this was a major one, sure, but there wasn't any splits. And on the 4 hour, I tend to focus more on split candles like these guys right here. And you know what split candles are. And when you get these split candles, I get this, there's a small split right here that lined up perfectly with like two other ones in the late term, right? Way back here that we just went over. So there was so many splits at that level. I knew that was a major level.
How did you just learn about your split candles and everything through your practice?
That was literally practice. Nobody else. Yeah, you won't be able to type in split candle on YouTube and find that's as far as I know, only me. Yeah. These splits, I started identifying them as support resistance as I started, I charted it out one day, just not really by accident, but I just looked at it and why, these candles split right here. It's got to be a major indication of a level. And, usually it is. And, I like to play it in the short term and the long term. So like the level that we're getting right here, we don't have a lot of splits up here. There's not a lot to help it. We got some major support wicks right here in this area that it's at. We got the 50 EMA, really hoping the SPY bounces for you. But like Apple, it was already so far up. It had so many news catalysts. We had the two big pushes. It wasn't really time to get long unless the SPY recovered, and then the SPY would be taking it, right? So judging by news catalysts on Apple, we had the AirPod hype. We had price target raises to 330, 325. We had all that good news coming out, and that helped that swing call that we had up and over, last week here. And we made all those, made those moves. But then, it's just so much more hype. But it's up, and up. You got to start looking at, here's the daily trend, here's the recovery, here's a 200 EMA. That's a bread and butter play. That 200 EMA lit up right here. That's always a support resistance play that you got to play. And the best thing about big tech is you can go to any one of these guys and just analyze for a while, and they're all in different places on the moving averages, right? And then I'll just sift through every single one of these until I find something, and I chart out for a couple hours at night, and I'm just going through it. I'm like, man,
now, even though Apple right now is so far from there's Netflix, there's each of these are so far from the other indicators. So it's going to start dropping, then those going to start curving down and meeting each other again.
Well,
probably, right? I mean,
because we had such big movement here. I mean, it's all
right.
Here's how swing traders look at it, especially have an earnings play. When you got that squeeze up on earnings right here, earnings play squeezed up is at the 50 EMA. Well, way back here, these lines are now curved differently. Obviously, it's an average of X amount of days. So we can't really take them back here and say, oh, well, the 50 is kind of, falling or blah, blah, blah. When it was close to here, trading, the 50 was probably more or less down here. And as it comes sideways and loops up to it, that's why I watch the intraday 1 minute with the 4 hour so much, because these moves, like a gap up on earnings, plays all the way up, hits resistance, pulls back. So as the pullback happens as a swing trader, I'm going to go, okay, where's the major support? And all you got to do is look back. I'm not going to chase it on the run, same as I'm not going to chase this Apple run up here. I'm going to wait till it pulls back. The 2 points will just go over. So as earnings comes up, hits a major resistance. I had charted out here from here. There's a gap down. and then there was a bunch of resistance here. So I tossed a nice resistance line slice through here, right at about 175.80. And then as I move over here, hit it, right? Came down. Now as a swing trade, I'm going to look for, in options especially, I'm going to be looking for a call. So I'm going to buy on the downtrend at a major support for a call. I'm not going to buy at a big uptrend on a call unless I'm scalping an intraday option move where I see something that's going to have 3, 4, 5, 6, 10 points like Amazon, stuff like that.
Yeah.
That's what it's going to be, what I'm looking for. So as Apple came down from that resistance at 175, which is a nice whole dollar here, had a pre-market rejection, real good short look on the day, came all the way down. Well, lo and behold, we had support and these two monster wicks that used to be resistance that got squeezed through as support. So this would be the first level. Getting these lines out of the way here, I would be identifying as support because these big old wicks right here acted as major rejection points. Then when we snapped over it, they are now major support points. So as we marked out that, we knew exactly where the limited risk long would have been. We wait for the pullback. I stalk these plays. Like when I come to the table every single day, it's like, what's where's the market, where's the news headlines, where's the yields, and what's happening in the market. Because I know if we're having a pullback here, and like Facebook had a bunch of divergence that one week where it just ran for no reason, everything else dumped. There's going to be news catalysts that drive them which way. So when you're trading one thing, you got to know a lot about it. You got to watch for the news catalyst, the current volume, what's going on and why it's moving. It's going to have AirPod news. It's going to have new iPhone news. It's going to have something.
Are you taking most of your news through the bottom at TOS where it says news, or are you looking at? Well,
I have a paid news source called Trade Exchange, and a lot of it goes into market depth and stuff, but it will also go through like pre-market headlines and social media headlines. So I know kind of what's going on in the world all in one little spreadsheet. It's about $55 a month.
What's it called again?
The Trade Exchange.
Okay.
It'll look something close to this. You get a little readout and it'll say who's doing the SEC filings that day. Do we have the Fed speaks, where the markets are at open, gives you a little recap on kind of what happened on the biggest movers, and then highlights. And then like here, it has pre-market and press release coverages from like social media. And it'll tell you as you're going through here, like Dell Technologies announces closing of a $4.5 billion first lien notes refinancing transactions. Well, that's not very exciting to me. I want to see Apple releases new Apple AirPods at discount price and investors are going crazy. Like that's a headline I would look for in the social media because it's getting pumped. As a catalyst in news, you want to look for that liquidity pump where people they're splattering it all over social media because that's what the market wants. That's what they want. So when these big pullbacks happen from a TA basis, I'm looking for calls here, and if I would have grabbed calls near that support and my risk would have been, breaking out of lows down at the end of this consolidation here, like that would have been my limited risk long. And if you would have took this for, again, swing trading on options, you're going to want to, it's not 2 weeks. You're going to want to look at least a month out on some of these. Yeah, especially in the swing trade. If you're trying to scalp a 3 to 5 day, that's a 2 weeker out. If you're trying to scalp intraday, only for a few seconds, like you're at the top resistance, like here on Apple, and it's coming down. You load up on contracts for seconds at a time, and it dumps, and you're just a scalp. It's just a scalp. But if you're looking for a swing, or you don't want to waste day trades, you can't take a whole bunch of them and just hope up or down. It's got to be on a solidified pullback, and you can see the long call here back on Apple as well. The 200 EMA here got really close to our old support that we had where our first swing would have been initiated. So when it came all the way back down to the 200 EMA, and when you're looking at these lines, you see how the EMAs are starting to spread out right here?
Yeah.
They're starting to get wider and wider and wider. That's an indicator that we're on the way up because the algorithms and the moving averages are already spidering outward, like a splash, like a wave would be. And this wave is getting longer and longer and longer. So when it's longer and longer and longer, now we have all this extension way out here. Now I start to go, okay, well, it's either going to do two things. Shorts are going to try to pick the top, which happened right here, and they got smoked and squeezed out.
Right.
And then it just kept going. So those idiots are the ones driving the price an extra exponential move yesterday. Or it's going to find some nice resistance and come back down. Well, all the shorts at the end of the day here that tried to pile in had to get out pre-market and at open and squeeze the hell out of it. And longs came in, and it just happened to be the 90 EMA there, right? That's why I always keep up the 9, the 50, and all these on the 4-hour intraday. So in Apple, as it's holding yet, we have our level up there for our stop out of 194, right? And that would be my stop out. Like I said, it could still bounce there because it has a major support from the prior day.
Mm-hmm.
And if I was in an Apple call, my stop out would be under 194. Now, the bad thing about buying calls up here is even if Apple is strong, it's going to take days for the consolidation to roll through up here and bounce 194 a few times, maybe bounce 194 to 198 a few times before it goes up. Well, we call those option killers. You know,
Okay.
that's when the decay sets in, and it eats away at your profit and eats away at your position because it's not in a directional move. It's in a sideways move. So when it had this big flag up and it's going to come back down, now if it chops, it's just going to eat away your premium. And then
Right.
it'll move up and all of a sudden, you
I,
know,
I should have. I mean, I just got out of the Apple
yep.
call. Okay, so it executed and got filled, which is good. So I only lost $50.
Yeah, that's not bad.
So on some of these things, I really had to be much more patient and wait till things go places and consolidate and work on the SPY and see what's happening there.
Right. I think if you practice the 4-hour chart, let's just say on a couple of these, and you start trying to find the reversals, like here's NVIDIA. I mean, you got to start, let's do some longer term stuff actually. If you were to go, like when I use these weekly lines, I go to my weekly chart and I look for trend rolls. Oh my goodness, TOS. Oh, please. Jesus. I go for, stuff like this where I'm going to get rid of some of this stuff. I'll just redraw it for myself later. So you can get these teal lines so you can see exactly what I'm talking about here. These lines that match up with intraday price action here, I'm only taking at algorithm lines. It's the same system I use
Right.
in the morning for the taking the high and slicing it through lower highs, taking the high, slicing it through lower highs, and waiting for the rejection and recovery, either or, of those lines intraday. So when I took all-time highs and I sliced it through this lower high, and all I did was extend it to the right, and then I had this line up here when the SPY was way down here still, and I'm saying, oh, it's probably going to go up to this trend because that's the most major resistance it has besides this weekly trend, which was a chop trend, right?
Yes.
It was sliced through from way back here. I took one of this lower high, one of these highs out here, and for some odd reason, I had a feeling about slicing it through some of the consolidation right here, and it sliced through here because I kind of bypassed through here only so I could get these tops to connect right here. Okay, it's the only reason I sliced through all these candles because this triple top was so important to me.
Let me see. Where's the triple top?
Right here.
Let me find. Okay. Yep. Got it. Yeah.
And then as I had that huge trend coming from way back highs, and then I sliced it through that consolidation, hit all these triple tops here, it gave me the insight I needed right here for the over-under plays on this weekly trend. And I was real patient with it. It came up here and it was chopping around and said, well, if the daily chart, we're just looking at the daily, these are day candles. So you can have your daily chart up along with a 1-minute chart, and you can, let's say you only play support and resistance plays from that alone and practice that. I think everything else would make a little bit more sense to you. So like or at least your identification for trades might, increase a little bit. Like say we have the daily here and we have the weekly trend and it snaps it. And then the next day it kind of pulls down and recovers it. And you're like, oh man, this is like a bouncing ball short. If this trend line was the floor and you see it bounce, lower high, lower high, lower high, and then it failed. Well, now we know we're on the backside. Now we start looking for prior support resistance. And even if we didn't know anything that was going to happen up here, on these days, we know the trend test is going to be a big deal. So as that big push squeeze came all the way up and it closed directly on the trend with the biggest, baddest, strongest candle it's had with the average true range in weeks, we know that it's probably not going to reject here. If it closed right over it right here, it's probably going to do a gap up because that's what a gap up looks like. When you have a gap, huge green candle with average true range destroying pretty much everything in its path and then gapping up over that weekly, well, then there was continuation. And if you would have took any support or resistance trades off the daily chart candle, you would have been killing it on prior day support resistance. Because if you would have charted out here, if we only knew, say 313 right here, and then we're like, okay, well, we're going to do that. And SPY has a chop day. It has a doji day. We have lessons on this where we go, it's over or under on the dojis, and we chart out that, and we chart out that. And all intraday, all you're doing is paying attention to those levels. And as they come out, you're going to see, all right, well, that the SPY broke and the doji came back up, had a big run. Oh, it's starting to break down. This dip buy, you could have seen this dip buy coming because you would have just charted out your support from back here. You would have watched this line and watched this line. And now let's do this for, let me just clear the whole freaking thing. Screw it. So let's get this real clean looking so you can see it. And right now on SPY, and as it's coming down and pulling through the 9 EMA, we know, and I just know it offhand, is about 280. So we got 280.30 and then 280 as a whole. The top of this wick right here is pretty much 280. Yes. And we have a mini of gap, right? So I would be looking for a horizontal line that matched up with a couple of the bodies or a couple of the wicks. Right here clearly is one of the biggest supports, right?
Yes.
At 280.37. Now, if 287 decides to let go at some point and just moving it out, I can see that this 280 lines up with this little dragonfly doji. So we do have good interactions beyond this, but I think just looking at this range right here, it's going to come down. SPY would probably press low for the rest of the day here, maybe tap here, retrace. And as it's retracing, I'm going to look for how much strength or resistance it have, because I'm going to look at a resistance point somewhere near, the tops wick here. So we got 3 tops of this candle, a wick here, and then, it's struggling with the spot right now because it's acting as support, but say it breaks it, bounces here. This is going to act as resistance. So the play out intraday I would look for is if it goes low and snaps, it's going to come down here, test lows. I could long it here for a limited risk long because I have all that support. I could long it back up to here where the next rejection point is before it moved lower to its next support bracket that I would watch for.
That's one thing I haven't been doing is being this zoomed in on the daily.
Yeah, definitely pay attention. Your daily levels from previous trade days are very important, and I can identify them on the 4 hour. But if you're getting mixed up and it's a little too much, go on and swap to the daily, and don't take trades until they're at the extremes. Don't take the trades if you're at the body. Don't take the trades you're at the wick. Don't trade until it's at the mega support. It's about sitting tight. If you want to be a scalper, well, be a scalper. But if you're an options trader, you only get so many scalps on a non-PDT account, and you're gonna have to trade big rangers. Or you're going to have to be really good at swinging. And right now with this market, any little news catalyst whips this thing all over the place. So it's really hard to get that swing mentality down,
Yeah. Okay, so that's awesome. That even just the advice to look at a week on the daily with the candles that big and see the interaction between candles is worth meeting with you today, I think.
That's good because this is one of my major, like when I was having trouble, my focus, say I couldn't grasp the market. I wasn't getting trades and I wasn't taking trades. I got a shy trigger finger. I wasn't quite sure what was happening. I always came back to this. This was the base of my entire system. This was the base of my entire trading. If I screwed up, I would always come back to go, okay, where's my daily? Where's the daily? Screw the intraday. The 1 minute screwing me. There's too much pop. Where is it at the daily? Okay. So like I said, the 9 EMA has got to hold the tops. We have this wick. We have all the tops right here. That level would have to hold. We move to the intraday. We have our levels. That's the same kind of level I said, okay, these are the levels I'm watching. And as I go through my levels on the breakdown in the morning, these are where I'm getting them. So I said, well, if it breaks down, we're going to see if we're up here and it loses this level and it comes down. Well, the 9 EMA is here, so it's going to magnet down to there. It's going to break it a little bit and pick back up. Well, it's things to remember during the week. It's Friday. We're going to have a lower volume. There's going to be people that don't want to hold through the week. There's going to be people that the FOMC chair meeting and the dovish stance and all the other crap caused a lot of that pop, right? Like we know certain news events and certain catalysts are driving the market, so we got to match up our technical analysis with that. So as we see a big old rejection here, because this is the scary level I would have been watching for SPY today. If this is the day we're trading and I'm looking a couple days back at these candles, why would I pick these two right here? Just so I know you know it.
They're going down. I mean, you talk about the red candles?
This level. Yeah. Why would I pick the level in between these two candles? What's the correlation here?
Because it's support from the other two back, the green ones.
Down here would be, yes. This it's a same thing identifying. I just wanted you to identify it up here. That is support. Yeah, it'd be going down here. That'd be a break level. But up here, why would I I'm thinking, well, if I was short on SPY today and it popped, right, where would my rejection point be and why would I play that, right? So right here, I'm looking at the daily. I have a wick on top of my doji, and it lines up perfectly with the previous body of 319. So 319's body lines up identically. Damn it.
Here's what's fucking me up a little bit is that now I see that the line's different than that little pencil, because I was watching the pencil.
Oh, don't watch my crosshairs. No, watch the red line.
Right now I got the pencil moving, and then I have a crosshair. Then they're in two different places.
Yeah, my TOS has its crosshair right here. Or are you saying you're getting another one?
Watching the pencil, right?
You can, yeah. You see the horizontal line right here, right? The red one that I'm kind of hovering over.
Yeah, that's the crosshair line.
Yeah, watch that one only. If you see this line, right?
The pencil, and it's in different places. So, see, there's Anyway, okay, so
maybe you should upload a little snippet of this recording, maybe to YouTube, and send it to me unlisted so I can review it and see what's happening there with you. Because maybe I screwed up a setting on Zoom or something.
Either that or because my laptop's not that slow, but
I don't know. It might be. I don't know. Well, I don't know. You're hardwired, right? You're not on Wi-Fi or anything. You have fast internet.
It's plugged into the cable.
Yeah.
Okay.
Well, anyway, back to this right here. I just wanted to really beat that in. Like if I'm looking at the SPY opening up, this level right here, and I'll call out the numbers so you can follow if you have to. It's 283.53. That's where this red line is.
Line now, yeah. Okay.
So this 319 candle, the body of 319, the top body, and the wick of 320 top, they're horizontal perfection. They line up perfectly.
Yeah.
So I know that is a huge resistance point. So intraday today, I'm going to go, well, if the SPY runs and it breaks this level, I'm going to be bearish on it. Well, magically enough, we double topped and we snapped it right here at the 200 EMA this morning. And we already knew this level was a huge pain in the butt for SPY because it was already under that level the whole, chopping on it the pre-market. It was pre, then it was under, came back up, had a rejection pre-market right here.
Yeah.
And then it came down again, higher load, broke over it, double topped, and then freaked out and snapped it because that was a huge level. Then it went down, 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 down. Our next level, the first level I had for our first consolidation bounce was 281.80s. I called it this morning. So I go back and I say, okay, well, why did I pick the 281.80s for the first potential bounce, right? Doji man. Yep. So I had this level set out for a couple of reasons. The top of that doji, which is going to be, it's right here. I'm going to look to my left and there's going to be prior support at the top because this is the top of that fat doji right here, right? And as I'm looking at a hole, I'm going to ignore this big squeeze because that's bullshit. That's noise. And I'm going to pay attention to the real consolidation movement of these candles here. And this was the top. So I'm going to look to my left and go, okay, well, SPY had a pretty big bullshit squeeze over the two resistance levels off the FOMC news, but I know this level is pretty huge. So if it breaks this level, the first level I'm going to watch is the 281.80s. And that's where it consolidated and started its retracement. Got the VWAP, came back down. And now, again, this is simple support resistance trading. If trend lines and all this other crap is just too much at once, simple support resistance, I always go back to, period. And then these levels, look how many times it worked out during the day. We had the bounce, we had the retrace, came down, lower high, and 50 EMA rejection, bread and butter play.
Right.
If you were using, let's say, the first hour's reversal trend, if you're using the lower ones more or less, you have the SPY is kind of crappy to do that on because you got a nice interaction here on this doji. We got the body, better average line, wick line, nice slice, and then a rejection point right here to the T. So our lowest red sliced through all these higher lows, connecting with these higher lows. So the algos are paying attention to this trend right here. So once it snaps that trend, it's going to come back up and test that trend because we don't chase. And then it hits that trend perfectly, falls apart. And it goes right here, finds support again at our 281.85, our fat doji homie, and it comes down. Another rejection there, and then it pulls back again. Now, because our first level was so big, and we had the first big move early today. Now we have a channel. Now, if I was watching it this morning, I'd be like, okay, well, I'm only going to short into resistance, and not only is this a major daily level, it's the prior it's the prior support. So after it snapped it, I'm just going to look for the prior support. And let me see if this helps too. Nope. So this support right here, after it snapped it, which again, this trend is from the doji, so we know it's a very big support. It broke it, came back up, tested it. So it used to be support, snapped it, came back up, tested it. That was the short entry right there. As it came up, and then the biggest indicator we use is that volume, right? So right here is that retracement. And I'm just going to look at the volume, and all you see is the buyer curl right here. You see that rejection, you see the red stacking up right here where there was no beat. There was a buyer beat right here, it came up, and a buyer beat, seller beat out right here, not by much, by hundreds, well, maybe thousands because it's SPY, but thousands of shares are just barely beat out. That was your indication to jump in right there. Not only do we have the volume confirmation, where's a seller beat, we have a major support resistance level, right? Right here that we charted out on the doji, and we have prior support that had snapped, and this is the retracement acting as new resistance, and then came back down. And our next level we had was 281.30s because of the big daily, but you still had an opportunity there, and especially in options when you load up on these, because SPY options are relatively cheap usually, way cheaper than most caps, because I practice SPY trading on options a lot more than I do any other stock. And, even 60 cents on a big pull right here with a big parabolic move down, even 3-4 contracts on a weekly contract for next Friday probably would have netted you at least 15 to 20 cents per. So $20 per contract. Say you threw 3, 4, 5 of them on there that were in there. There were probably only maybe 60 to 80 cents, $1 at most.
Okay.
Okay.
Yeah, I got to share. Upload this to YouTube. It's maddening to try to follow your chart.
Really? I wonder what's happening.
Fucking me up, man. It's because the mouse isn't going with the crosshairs, and the crosshair is what you're talking about, and it's sporadic, and it's a bitch because you're taught. And when I do get in line and get in sync with it, I'm like, oh yeah, that's what he's talking about, and then it goes away, and I'll share that with you. It's hard.
Yeah, please do. Because
I have a couple questions because it's 7 or 8:25. Okay.
Sure. Shoot away.
You're hauling ass talking, and you just see the screen.
Sorry. I try to fit it in. If you want me to slow down, just say the word. I really just try to cram in like.
Now didn't matter. I don't know. Anyway, but I have it to look at it later, and I did get something out of it. It's just hard to watch. Okay, so your trading rules. Okay, you have a set of trading rules.
Yep, definitely. Well, I mean,
what are they?
If you the rules
set of 5 trading rules that you adhere to, no matter what.
Yeah, well, I mean, as far as like the ones where I started, I can give you the ones like I don't follow like the little list I had when I wasn't following rules way back when. I would have, I'd have to write down, I have a max loss of X. Okay. Right. If I hit that max loss, it does not matter what grade A setup appears. I have to walk away because I was too ignorant to wait for the setup. I am not allowed to trade. You do not deserve to trade anymore because you lost X amount of money. So next time you will be patient and you will wait for the grade A setup. You know what I mean?
Yeah.
To take that trade. And I was too rushed a lot of the time early. I was just taking some trades to take some trades. And, I had to write that rule down because I would hit a max loss and I'd take a couple more trades and then max loss ended up being doubled. And, that's how accounts blow up.
Right.
And if you don't have a plan, you don't have a trade. My old buddy Johnny would always say that. Like, if you don't have a plan, you don't have a trade. So when I enter a trade, I know exactly what my plan is before entering it. So like TIFF today on the trade on TIFF, there has to be a plan of stop out. Oh my goodness, my keyboard. Oh, nice. She had a really good run here after the fact here. But the fact of the matter is I took the long here of the recovery of this yesterday's close in 100. The plan was if it broke 100 and started failing 100, I get stopped out. No ifs, ands, or buts. Not, oh, we should maybe wait for VWAP. No, you lost at 100. You're done. That's it. That's my stop. My profit take, my target was 102. So when I took the trade, I had in this consolidation range, because I was using this level and this level alone, yesterday's close price, okay, right at 105 cents. That's the level I went off of for my long right here. So when I took this long right here, I said, if the yesterday's close breaks in 100 breaks, you're out. If it goes up by 2 points, you're out, period. And lock-in profits on the way. So I had when I took the trade, I got a 140 cent fill. So I was in like here near this doji. So I got a bad fill. I was trying to get filled down near yesterday's close to anticipate the breakdown. And we have obviously all the support right here from the prior rejection, which we had broken over. And the whole trade plan was a support resistance play. Came up, it tested the yesterday's close, came back down, held VWAP, came up, and again held yesterday's close here. So this is the confirmation of strength I needed. Now I was looking for higher lows off yesterday's close, which I got. And that's why I bought in, because it's a simple support resistance. It was resistance, now support. That simple. So at 140 cent average, I went, okay, well, my rules, my plan is no plan, no trade. So I'm getting stopped out, period, at 100, and I'm not taking the trade again. I'm done. I messed up. And then I'm going to review the trade and why I messed up and go back. Well, the trade ended up working out. Took profits over highs right here is when my first take was of 100 shares. So the break over highs, that was my first take of 100 shares out of 300. Let the rest run a little bit. Took it off at 101, I think 70 or 80 right up in here. And then the next big push up to 102. I was already out by then. I was out at 101.98, I think it was my ending. Okay. So this big push. I took profits on the way. Ended up locking in, a solid amount. And that was why I took that trade. It's simple support resistance trade. So my rule there has to be no plan, no trade. So if I go on Apple, just to touch on, and I don't want to beat you up about it, but when you took a long wherever it was and you're like, oh, should I sell it? Well, you should know where your stop out is, and you should definitely have an idea of where your max loss is. You have to have a max loss for a trade. If I enter a trade for, thousands of dollars and I go, okay, well, if it goes against me 40 cents, I know my 300 shares times 40, that $120 loss on that equity trade on TIFF, I know that's my max loss. So if I see the P&L roll up and, oh shit, there's 140, 150, I got to get out. It's under 100. I messed something out. It's done. I have to have a max loss. So when you took that 200 call around here and you went, okay, well, I got to get that bad boy. Like, where's your stop? Like, don't let it trail off. But in options, it's a little bit different than equity because you have time decay. The more it goes sideways, the more you lose anyway, right? Yeah. So that's why it's so important to buy at support resistance levels from big old daily candles. So if we were on Apple daily and you could see she's on an extension run, we don't have a major support. It's just consolidating at highs. So it has the fact where if it wants to go higher, it's going to just have to sit up here and not fall apart. To me, it looks like a bouncing ball short now. 194 is the floor. If you drop the ball from here, hit 194, the ball only comes up so high every time.
Okay, great.
It only comes up so high, only comes out until the ball slowly goes din, 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 and breaks the floor and gone. Right now, Apple looks like a bouncing ball short. Now, I would have been short biased on the cross back here. The 50 EMA, it has crossed under. Now, remember what I said about the EMA is like a wave as they spread out. Well, back here, as the 50 EMA started crossing through everything, that's when I would have looked for the retracement up to short, because I knew as this comes down and is spreading out right here, that there's going to be continuation to the downside. There's going to be a lot of patience involved. But 50 EMA has been holding it down. 194 is a big floor, but that would have been limited risk.
Okay, that makes sense. And I got to tell you, so like once I figure you went a little bit slower. And so watch the crosshairs about what you're talking about is, because your cursor is like, just so you know, and I will share this with you on YouTube.
Yeah, I definitely check it out.
Your cursor is like 3 inches away, like 8 inches away from the crosshairs. So that's why it was hard to.
No shit. Okay. Yeah, definitely. Because then if that's a problem on my end or Zoom or whatever, definitely got to get it fixed up and then, hang out with you more for nothing. So we definitely want to.
We're cool. So that's awesome. Got that. And so you basically spoke about the plan trading rule, your max loss trading rule. Anything else you want to share on trading rules?
Yeah, I would focus on a mindset rule. If you're waking up, like, your mindset, you know yourself better than anybody else. If you wake up and you know you're not feeling yourself just a little bit, and you know it might take, a toll on your trading, it might take some kind of accumulative action to kind of crappily, make you do something that you wouldn't do. If you're not in the right mindset, um, here's a long reversal on Apple. That would have been the buy. The if your mindset isn't there, and your mindset, you're not clear, you're coming down here, you're in a bad mood, something happened, something tragic, something's bugging you, like that. Trading is 90% emotions, 10% technical analysis. So if you're not in the right mindset, sit on your hands. That's it. Just, if you're not in the right mindset, don't trade. Period. It's an emotional game. It's 90% emotional.
Do you, have you read the Turtle book?
Turtle book?
Yeah, it's trading with Way of the Turtle.
Way of the Turtle. That's what it's called.
Yeah, okay, so you haven't. That's cool.
No, I have not. Way of the Turtle.
Well, a friend of mine goes, I hadn't talked to him in a long time, and I said, yeah, I've been trading, and he goes, Way of the Turtle. And I'm like, I thought he was making a joke because he's a fucking stand-up guy. I didn't get it either. And then I told him I didn't understand what he was saying, and somebody had turned him onto the book. So now I'm turning you onto it, and it's a book that's like a major book in trading. Okay, so it's kind of interesting, so you can check that out if you want. One of the things, though, that they talk about, or he talks about, is basically systems. And your system is basically, that's what you've been hammering over my head trying to figure out, which I like. Okay, so that's your system. Concerning your system, do you just see it as probabilities? Is probabilities one of your things? I think what they did was, because they were trading with $1 million accounts on a bet that two other rich traders made, see if they could, whether it was learned or inherent trading. Okay, that's what that book's about. And he basically talks a bit about gambling theory, and he sees it as probabilities, where you get out when it doesn't go your direction and you stay in when it does go. The odds are you'll make money if you stick to that fucking.
Well, that's a basic trading rule. You cut your losses fast and you let your winners run.
Right.
Again, that also turns back to 90% psychology. It's like, well, is this a system? Well, no. And essentially, it's an emotional buildup that I had to battle myself. It's practice. And just like in the old China studies, Japanese studies, they do these awesome child studies where if they can get kids to learn patience very early, they're much more successful. Patience being one of the number one rules next to, a max loss and trade plan. Like it's all patience. And most people, they walk in, they don't respect the money. They see all the big P&Ls. That's why I'm not super huge on trading live with every little button I click and everything, everybody like being able to follow in the trade, because 90% of people, they don't have the patience. They're just going to go, oh, he's clicking that, I'm clicking that. Well, I might have clicked it and then clicked it right off, and you might not, and there might be a 4-second lag in Zoom, and I just averted a 2-point drop and now you're stuck in it, kind of thing. And they're not taking the patience. So when somebody says, well, it's developmental psychology for me, and it's all about patience and practice. And the study showed that if you can teach someone patience, or at least a child patience, that is the number one route for success. There's been so many studies drawn out over the years that I've read that are how to teach, how do you make your kid successful? How do you instill value into his life? And how do you get that value from him, progressively? And patience is the number one consistent factor in every successful person. And it's not rushing. I remember I would wake up and trade demo. I think I traded demo for like 5 or 6 months every single day, getting 3-4 hours of sleep, trading for 3-4 hours for like half a year before I even put money back into it, because I lost so much money right away. And then, then my trade plan comes like, okay, if it's not on one of my trend lines, a support resistance, and I can't identify the trade very easily, don't take it, period. Okay. Again, that falls in line with the no plan, no trade, but still, like, say you go for one certain setup, right? Say the bouncing ball chart, or a cup and handle pattern, or one identified pattern. You get so good at trading, and you have all your charts up. You just look for that one pattern. That's what I do with like volume trading and trend trading off support and resistance. That's what I look for. Like this being the Apple long, this is the limited risk entry for Apple long, only because it's the highest one through lower high, and it didn't break the floor on this last bounce. So especially being Friday, this thing's just going to drag out, wait for the EMA. Is it either going to hold back down for the 50? But in a regular scenario, through the highs, through lower highs, in a regular scenario, this would be the long signal, because it's starting to pull away from the trend with higher lows. It had rejected, found the floor, now broke up and over. Now it's slowly pulling away. It didn't complete the bouncing ball short. It didn't break down right here. It didn't snap down to 194 and continue lower, even though we got a lower low. And now when a lower low comes,
it's going to snap down though. It looks like, right?
Right. Yep. Because on a Friday, though, because it's not inherently a normal trading day where it's going to be lackluster volume. So my bias would still be short on it, because not only do we have a short bias, we have ramping seller volume with one buy candle. That doesn't mean anything. All it is algos waiting for a seller beat candle for volume. So in any other situation, I'd start looking, going, oh, okay, there might be a confirmation for a long coming. But Friday sell-off, market turn down, looking at the SPY, probably coming down off the 50 EMA, you would know, looking by the SPY, knowing the day of the week, and looking at the trend, because trend is friend, you would know not the long Apple. Even though SPY is on a perfect downtrend, Apple is not on a perfect downtrend. Apple is on a bouncing ball pattern short.
Okay.
It is waiting for its turn to break down, right? It's ding, ding, ding. And it's following SPY, but it's so lackluster volume and so boring on Fridays that sometimes these plays take a very long time. Again, circling all the way back around to the point, patience.
Okay.
So it's just one of those things. But yeah, the way the turtle looks kind of neat. I'm just kind of peeked through the description here, and I might take that upon me to check it out.
Yeah, there's some stuff in it where it's just like, because he's talking about the formulas and everything and how they got there, and maybe on the second read I might not get stumbled up by that, because I got to get through that and get the meat of it first, because I'm just not into it and I'm confused by it. So
yeah, I mean, it's just, if it's technical, I mean, everybody can do the math point, everybody can do technical analysis. I mean, it again, 10%, it's all emotion. Can you handle, where you're stopped? Like, can you follow your rules? That's pretty much the number one emotional questions. Can you like, are you physically able to? If not, I probably wouldn't trade.
Yeah.
And I'm not saying you, I'm just saying like a person, like in general, where someone
on it, man. I definitely, that's one of my things. And
well, clearly you're still here, you're still showing up, and it's just like, we know, so now we're getting a trend test here again, like on Apple, and it's this boring, like I would sit here and I'd stock one or two stocks, pick. Don't pull up 17 charts or try to follow along if I'm bouncing around. And if I'm talking about your stock, you pay attention to one chart or two charts and have patience, and you just chill the whole.
I tried to work with Netflix and it was just kicking my ass. So
well,
I'm on Apple now, and it seems it's following things in more of a patternish, Netflix is fucking me, man.
Yeah, and Netflix is a pile sometimes. Look at these squeeze plays. Now, Netflix, again, when we talked about Netflix, they had this range consolidation here. We had the 200 EMA tap that just has these whipsaw wicks. Netflix isn't a clean mover anymore. These stocks go through phases. You have to be adaptive.
Holy shit, man.
Yeah, they always go through phases. You see that whipsaw on the Netflix, and Apple is such a slower, more progressive trader. That's why I say if traders would practice trading SPY, which can be a pain in the butt, but here's the 50 EMA crack. So 280 is on deck.
Okay.
And you know why I picked 280 right here, obviously, for technical analysis. You see all these wicks accumulating right here. We have our cake candle. We got a little cupcake dude with a huge squeeze candle. So we know this is where all the shorts got squeezed out and all the longs came in, and there's still positions holding there. So we would chart that out. And that's why right now I would look at this and go, yeah, target SPY 280. It'll probably make it down to there today.
Yeah.
So that's just. What's up?
I was just going to say thank you, because I don't want to take too much of your time.
Yeah, no, you're good. I mean, a couple minutes after, I just got to head upstairs. I can hear the kid running around, and my girlfriend goes to work in a little bit here. I got about 20 some minutes. So, yeah, let me know when you want to, if you're the next, it's daily support resistance. If you can't, if stuff's troubling you, we go back to the basics. It's daily support resistance. Burn that into your head, because now even trading off the daily charts alone with an intraday setup, like you set up a flex grid like this, then you open up another chart and you have like a one day, 1 minute, or even if you're getting scared out of certain pops, make it a 2 minute, make it a 1 day, 2 minute. Don't use the 1 minute. Use a little bit of less noise with a 2-minute, and then pay attention to your support resistance. Say, on the SPY, then that's literally support resistance training, and write down a set of rules for your max losses, definitely, and no trend, no played. So no plan, no trade. So if you were to go into something and go, okay, well, it might go up here, and if you can't answer why it might go up there, then you're not allowed to take that trade, period. That's what I tell myself. I mean, like if it should go up here. Why should it? And if I'm not fast enough to break it down, well, too bad I missed the trade. Too bad. There's going to be a million moves every single day. There's always tomorrow, and everybody wants to be rich now. And that's just not, not you, just people in general. And that's just not.
Yeah. I mean, it took me a while to figure that one out, but.
Oh, trust me, I did the same thing, my friend. I was an ignorant kid in 20s and, 22, 23. I got this, no problem. Yeah. Well, I went all my savings from my first whole business into this thing. It happens. It really does. I've seen people take some amazing losses and some amazing gains, but I'll be in the middle. I'm happy with $500 to $700 a day. Holy cow, that's way more than anybody making it. No,
that's awesome. Yeah.
So, all right, my man. I'll leave you at that. Hit me with any other questions that you got, bud, and then we'll hook up again here shortly.
Here's the one thing that we didn't get to that I forgot about. But
sure.
Are you good at Excel?
Oh, you did mention something. No, I'm not. To be honest, I'm not very proficient.
No, I'm pretty good just from my film budgets and shit when I was doing that. So
okay, sure.
Take a look at those for next time, just for grins. The option legend tells.
What is it, like a risk management legend or?
No, just to track option trades.
Oh, okay. Okay.
An Excel sheet to track your profits and loss and the trades in options.
Sure.
I had a website that I liked when I was trying to day trade. It gave you a graph bar on where you were at, and I would put my paper trades in there.
Oh, yeah, like
FinViz.
Yeah, like FinViz. Christ, there's another one that does that too. I forget. It's like a trade
for options, man. But I haven't. So I found this Excel sheet with the legend so far.
Yeah, look at this.
There's a site that you can plug in like FinViz for options, man. That'd be awesome.
Yeah, for sure. All right, yeah.
In there, and it had the graph bar and what I did, and I was journaling pretty good.
Awesome. Yeah, I try. I guess you don't use the technical aspect. I literally write down most of my stuff still, but that's just because I'm in that pattern. That's what I'm used to,
Yeah, I might have to start doing that. Okay.
I just jot them down.
Have a great weekend, and I really appreciate it, Brandon.
Yeah, anytime, man. Take care. Hope your pup is good. If not, it sounds like she's had probably, or he or she has probably had one of the best dog lives.
Had a great life, yeah. But I'm gonna go get her right now too. So have fun with your kid and family, and a good weekend. And I'll talk to you next week.
You as well. Thanks, Art. Take care, buddy.
Thank you, Bob.